Within the realm of trading, there is perhaps no more important functional or mechanical concept than that of risk management. Various exchanges have rules that apply to their market participants or brokers. They have very few rules that actually apply to us, but they do have one very important universal rule, and that is, if I have no money, I cannot trade. This can be summarized as no dough, no play. If you have blown your account up or overtraded it, you simply can't play. Now, the field of risk management can be a fertile ground for quantitative analysis, but I want to leave the complicated aspect of it behind and show you how simple it can be. Now, risk management is extremely important within futures markets because when you trade a futures contract, you are taking on what is known as a contingent liability. You have the possibility to make a great deal of money because of the leverage nature of the contract. Likewise, you have the potential to lose a great deal of money because of the leverage nature of the contract. This means that you need to trade within your own limits, within the limits of the amount of money you have, which means you need to be able to work out how many contracts to trade. This is quite a simple matter. You go to the Tools menu, you go to Risk Management, and you'll see a box open with two tabs. The first is the Risk Manager, and I'll talk about this. Let's assume that I was trading Brent crude, and I was going to enter at a price of say 44.85, which is where the market closed last night. And that based upon my analysis of risk and where I want to put my stop, I would put my stop at 43.85. Let's assume I had $1,000 to risk on this position. Now, what I'm going to ask the downloader to do is to calculate the number of contracts I can trade based upon the risk figure I have entered into it. And as you can see, it's telling me I can only trade 0.6 of a contract. Since you can't trade fractional contracts, I'm going to have to look for another way to trade my view, be it through options, CFDs, or a share that is highly correlated to the price of oil. But I cannot trade this instrument. I'm undercapitalized. And being undercapitalized is one of the major issues that futures traders face. So you need to be acutely aware of how much money you have and how much money will be required to trade a given position. Now, there is a second aspect to the risk manager, and that is the risk equalizer. What this does is it gives us a sense of how we can measure our exposure based upon other contracts, but it also tells us how we can put together spread trades. For example, let's assume that I'm trading the Australian 10-year bond, but I want to set up a spread trade that also involves the US 10-year note. How many contracts do I need to trade of each instrument for my exposure to be equivalent or matched? And this is a very simple matter, because what the downloader does is it fills in the ATR volatility value of each contract based in Australian dollars. So it tells me how far each contract will move on a daily basis based upon its volatility. I then enter the number of contracts I have of the Australian 10-year bond, and I ask it to tell me how many contracts of the American 10-year note I will need to have an equivalent position, and it tells me 1.5. Once again, I can't trade fractional values, so what I'm going to have to do is try and manipulate or massage this trade so that it is an equivalent trade. So I have no possibility for loss based upon a mismatch of contracts. It's still possible to encounter a loss because of my view being incorrect, but I don't want a functional error such as a mismatch of contracts. So what has now occurred through using the risk manager and in turn the risk equalizer is I've automated part of the process of trading. I don't have to go through the process of working out how many contracts I can trade, how many contracts I need on each side of my trading equation to balance the trade. Instead of going through that laborious process of calculation, I can now simply get on with the business of trading.